below that, that means that I've got the beginning of a different directional movement, a descending movement. It would no longer be ascending to the breakout of the weekly range. Range would have to go higher. So we're going to be monitoring when that exchange happens between the buyer and the seller. We are overbought on all indexes starting 211 out. As we start 211 out, I will be given my yearly predictions on the quarterly, which will be economics, 15 indicators of economic indicators for 2011. We will be doing, and that will be in its own component, the first quarterly earnings for 2011. We'll be monitoring and updating carefully every time like we do, and going through that earnings season and trading after hours is where the biggest money's made. Just like in pre-market, you can get these things that are going to happen, these moves that are going to happen. But we do know one thing for sure, MMTs. Let me blow up just this section right here. I'm sorry, here. Let's go back and just let me go ahead and get this for you, MMTs. This is the movement right here of the breakout. This is a weekly narrow range bar of the holiday and this beautiful New Year's Day that we gather here today. So basically, one of the things we would be looking for would be a weekly reversal bar, kind of like this red one right here. And it would have to be below that cross, because then what that starts is the reversal, descending mathematically in our platform. When the ratios descend, that means that the broader top and the Dow is weakening. And basically, so for the reversal side, we look for a gap down in a week, kind of like a bar like that. You don't ever close above here though, okay? Because if you close above it, then it's not a reversal. So part of what we'll be doing is using the Dow daily, 60-minute, our 15-minute mathematical formulas between buyers and sellers as far as strength and weakness go in MT. So that way, you know, if you want to be on the put side of the Dow and the Dow reverses, it's time to start buying bear funds. And that would be related. ETF bears, that would make a move. If we reverse, well, then that's the side of the market and the focus that we would be doing in that case. Now, on the other hand, if we gap above this weekly thing, and we would be looking for a beginning weekly bar like this, or like this. We don't want to see the narrow range week, because when you see narrow range weeks, that what that means is that we're going to see quite an increase on Monday, which will be January 3rd of the opening bell for 2011. And boy, MMTs, this is a Dow weekly chart. And let me tell you something, we're going to rejoice in that price action glory. We're going to be getting the right side of that market, and that's our focus. Which ETFs do I use on this side? So where am I shorting weakness, and where am I going long strength? And how am I combining all of that directional movement in both sides for the bear and both sides for the bull? So how do I short a bull and go long a bear? Well, what we will do is key specifically, once again, get involved in this last 1, 2, 3, 4 week move. This was the end of November right here. November 29th, because it's a weekly chart. And then the following week here, December 13th, and so forth and whatnot, and what's in the middle here. So basically, you can see here that these particular bars that we have here, that's 1220 week, that's 1227, that's it. And we own this application, by the way. Boy, what a glory this is. So as far as the opening bell on the Dow is overbought. And we're going to be putting a blow off top there, and there's going to be a correction sometime coming in June. Now, exuberance and complacency can run at high levels. However, we're going to take a look now at this daily Dow, and I'm going to go into the brain. This is a daily chart on the Dow, and I'm going to click right there, and bam. And each half delta line on a daily is 33.55 movement lines for the Dow. That's exactly what it is, MMTs, and we'll be 100% right. Now, let's just take a look over here, MMTs, at what we did as far as getting the full shot right in here so you can see this clearly, because we don't want you to be confused. So once again, there, I believe we're in the frame. Let's take a look on the daily. Let's pull up that hood. There it is, last half daily bars. Okay, let's populate the daily. Let's go ahead, look at the gauges moving. Look at that, damn. Look at these gauges. Look at that IR bid popper. Whoa, boy. So basically, after we get all the diamonds, they're going to tell us everything. And on our new platform, which is an upgrade that we have all these half bars highlighted. We have a different info panel, MMTs in here. So on a daily level, it takes 5 of these, 1, 2, 3, 4, 5, to equal a weekly move. So let's take the last 5 days, just for now, and let's get into the last diamond here, show half, Dow half, okay, time 12:31. So basically, we have this particular delta line is the new lines for Monday's training, but you can see where previous people were making their engagements here. This is a daily snapshot between the buyer and the seller on a holiday week. So we've already had a test up here and a daily reversal. This is what we would be looking for on the weekly, because the Dow is extremely overbought. So basically, if I can never close above half of this whole bar right here, let's find out what that is. That half bar is 11,598. We close at 11,578. That's half of this movement, this daily movement. I have to close above that number. No, it's 11,598. That's what I have to close above in order to say, and I have to see price action break this. This is a half delta line in your platform, in your brain, and that movement, it's not a teeny movement. He's got to change that. So we'll say half delta movement. That's 33.55 on this exchange right here, Dow. You'll see it move that way intraday. Just because it's a daily formula doesn't mean it doesn't move intraday. It does. That's a phenomenal thing, right to the penny. So when I'm showing you that top, that's the beginning reversal, light volume on Friday. There wasn't enough to squat about. So the thing that we want to be mindful of is what you see on a daily MMTs is looking for the mathematical deterioration, the descending value, the descending value ratio in your platform. If that ratio in your platform tells you it's weak, then you know to be short. It's that simple. This is the beginning reversal. Like I said, 11,598, you have to close above it. That's half of that move. That's half of that daily bar, okay, versus your weekly that we showed you. So on a weekly level, what we're looking for is a gap down bar. But when we get these gap down bars, they can't be narrow range. You want to see a daily bar on a sell side start and at least be, this was a nice movement on the Dow that day. Basically, it went 1, 2, 3, 4, 5, 6, 7 half deltas. That was over a 207 point move that day. Okay, so in our system here at 33.5 movement, what I want you to know is a gap down with a bigger red bar, not narrow range bar. Once we have that and or can't close above it and we go through the top, or we break up above and have a daily reversal bar from the top down, such as that, is what we're going to be looking for in the short term for the Dow Jones. Now, we are going to be doing very updated Dow on a daily basis, and the Dow is extremely overbought, MMTs. We're going to be taking a look at every bull and every bear ETF that's related to these directional movements, whether they're breakouts or breakdowns. Doesn't matter to us as market makers, but that's when we start getting on a position where we may have 4 or 5 trades that equal one directional movement. I will be updating the full year in January as to what the Dow Jones is going to do. And this is a daily Dow Jones. This video here is about 20 minutes long. I'm going to stop it now, but we're looking for that top. We're looking for a big red bar. We're looking how you break down, you descend mathematically in your brain, meaning that everything that you're taught in here, everything about the bid and ask trend ratio, everything about your IR ranges, everything about your movements in here and what they equate. When one goes one direction, it's short. When one goes the other direction, it's long. And then remember, MMTs, the platform prices in the behavior of the public transaction before they make the transaction. It's already got them. They make the same decisions all the time. Then market makers like our school here, it's the only one on the internet, but the thing about it is URB and market makers, they control the market. They control the indexes. And they control everything as far as how high it's going to go at resistance and how low it's going to go at support. Then the public is going to make their moves in the middle, and you're going to make moves off of the public, meaning that you're going to trade against the public. That's what the platform is about. That's why you get paid and they get left behind. MMTs.